After 4 consecutive months of year-over-year sales growth, the GTA housing market has finally hit a bit of a speed bump. Home sales dipped slightly in July, but here's where things get interesting. Inventory is also falling and falling quite significantly. So are we actually seeing the market slow down? Or are fewer homes coming onto the market, creating the conditions for prices to stabilize? Let's break down the July 2026 GTA real estate market. So overall market trend, let's start with sales. In July, 5,995 homes sold compared to 6,047 in July of last year. That's a 0.9% decrease year over year. Sales also dipped slightly compared to June. So after 4 consecutive months of year-over-year growth, July is the first month where we've seen sales move slightly backwards, but I don't think we can look at that number by itself. Because while sales are down, new listings are also down substantially. That means there are fewer homes coming onto the market for buyers to choose from. And when sales account for a larger share of the available listings, buyers could start facing more competition moving forward. Average home price. The average GTA home price in July came in at $1,003,956. That's down 4.5% year over year. Prices also dipped slightly compared to June. So we've gone from being above 1 million in June to just barely above that mark in July. But here's something important to remember. The year-over-year price gap has been getting smaller over the past several months. So although prices are still below where they were last year, we're gradually moving closer to price stabilization. And an inventory continues to tighten while sales remain relatively strong. We could see that happen sooner rather than later. Why did sales come down? So why did sales dip in July? One of the biggest reasons is consumer confidence. Many would-be buyers are still waiting for more certainty around the economy, tariffs and trade, inflation, borrowing costs, and where home prices are ultimately heading. TREB's president, Daniel Steinfeld, noted that buyers are still looking for more confidence before making a purchase. But here's the interesting part. If the current trend continues, buyers may actually have less negotiating power moving forward. Why? Because there are fewer homes coming onto the market. So if sales continue to account for a larger percentage of available listings, sellers could regain some leverage, and that could eventually push prices higher. Some positive signals. There are still positive signals in the market. TREB Chief Information Officer Jason Mercer pointed out that recent economic news has been more positive than expected. Economic growth and employment readings have surprised to the upside, and that could help improve consumer confidence. If buyers become more confident in the economy and home prices begin to stabilize, we could see more people who have been sitting on the sidelines finally decide to make a move. So July may not necessarily be a sign that the recovery is over. It could simply be a month where buyers are still waiting for a little more certainty. So let's break down by home type. Now let's look at each major property type performed year over year. So detached homes were down 5.1%. Detached homes continued to decline and performed worse than last month. Semi-detached homes were down 7.4%. Semi-detached homes were down even further year over year and also weakened compared to June. Townhouses were down 3.9%. Townhouses were also down, although the decline was smaller than what we're seeing in some other segments. And condo apartments were down 2.3%. Interestingly, condos were the strongest performing segment this month, and actually improved compared to June. So while the overall market softened slightly, the condo segment showed some encouraging movement. Inventory. And this might actually be the most important number of the month. Active listings were down 12.1% year over year. That's a significant decline. So buyers are facing fewer homes plus relatively steady demand, which equals potentially more competition. And that's something we'll want to watch very closely heading into the fall. Because if sales begin increasing again while inventory remains this tight, sellers could start gaining more negotiating power. And that's exactly what could cause prices to finally level off. Days on the market. The average home spent approximately 45 days on the market. That's only slightly different from last month. So overall, we're still looking at roughly 1 to 1.5 months to sell a home. The market isn't moving extremely quickly, but it's also not completely stagnant. Properties that are priced correctly and marketed properly are still moving. Economic indicators. Now let's look at some of the economic numbers influencing the market. So GDP Q1 2026 was down 0.1%. Employment was up 0.9%. Unemployment was at 7.2%. Inflation was at 2.8%. Bank of Canada overnight rate was at 2.3%. Prime rate was at 4.5%. There are some encouraging signs here, particularly with employment and economic growth, but inflation and uncertainty around borrowing costs continue to weigh on consumer confidence. And that's why the fall market could be particularly important. TREB's long-term outlook. TREB CEO John DeMichelle highlighted another major issue affecting affordability: municipal roadblocks to building housing, restrictive zoning, outdated rules, high taxes and fees, and lengthy approval processes can all increase the cost of building new homes. And according to TREB, these costs can add tens of thousands of dollars to price of a home. So this isn't just about what happens to prices next month. The bigger question is, can we actually build enough of the right types of home to meet GTA demand? Because if we can't increase supply, affordability could remain a major challenge even if interest rates come down. So final thoughts. So where does that leave us after July? After 4 consecutive months of year-over-year sales growth, sales finally dipped slightly. But at the same time, inventory is down 12.1%. Prices are still down year over year, but the gap has been narrowing. And buyers may gradually be losing some of the negotiating power they've enjoyed over the past couple of years. So I wouldn't necessarily call July a bad month. I'd call it a transition month. The big question now is what happens next. If sales pick back up while inventory remains low, we could see prices begin to stabilize heading into the fall. And if that happens, we could finally start seeing the GTA housing market shift into a more competitive environment. So what do you think? Do you think GTA home prices have finally reached the bottom and are getting ready to stabilize? Or do you think we're going to see another decline before the market really turns around? Let me know what you think in the comments. And if you want to keep following the GTA real estate market month by month, make sure you subscribe, and I'll see you in the next market update.